Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Is the U.S. dollar still on the way up? He also checks out the gold market and possible new U.S. government pandemic stimulus spending. Dr. Marc Faber from the Gloom Boom Doom Report checks in from Thailand. He comments on growing worldwide socialism and whether the U.S. dollar will remain the world's reserve currency. Marc Leibovit, publisher of the Leibovit VR newsletters, tells us about how the upcoming U.S. election is playing in the markets and what sectors he believes are hot. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to the show, Ross.
Good to be with you, Jim.
Ross, the U.S. dollar, is it still the shiniest penny out there?
No, the bloom is off the rose here. The retracement rally, and it was pretty good. We had capitulation lows a month ago, nice base, and the target was going to be up to the 20-month moving average, the 20-week average. We were looking for resistance sort of in the 94.90 to 95 and a quarter level, and it got up pretty close. I think we kissed about 94.80, and that was a Fibonacci retracement level at 23%. And then it rolled over, and pretty tough week. We closed down here in the 93 and change level, so pretty hard break for the dollar index. And having had that retracement rally, it's probably got some room to go on the downside at this point. So, the reciprocal of that is the precious metals. And, a week ago we talked about the fact that we'd had just really good oversold signals. It's about 10 days ago now, and we were looking for the rally to start up again, and probably to, have first resistance up in that 1910 to 1920 level, maybe 50% pullbacks, as we were then forming a new bias once again to the upside. Well, this week on Tuesday, Trump comes out and says there's going to be no stimulus package, nothing until after the election. So markets everywhere got hit.
Oh, Ross, there's an update to the stimulus for President Trump. Mnuchin now says Trump has approved a stimulus program.
Okay, is this the 1.8 trillion?
Yes.
Okay. Now now Nancy still has got to get that through with her group. So but this is the kind of action you've got in terms of news. There we were Tuesday, and they said there was going to be nothing. So markets gave back. Stock market, precious metals, everything had a really bad last hour of trading on Tuesday. That was just for the precious metals. So gold, silver, and the miners like the GDX, they gave back half of the gains that they had off that nice low. And then at the end of the week, we're back and moving again. So gold now up to 1934. And in the short term, I think, as I say, this upside bias, you're probably looking towards 1970 to 2000 as far as a reasonable upside target for gold. That would be a 50 to 62% retracement from the August highs. And I think you get a bit of a pause once again in there. The whole objective here is to buy the tips, lighten up into the rallies, but overall looking for pretty good bias from that one. And this, all sits within the big model that we're looking at, which is that this whole sort of cup and handles, a big saucer pattern since 2011, from the 1920 level down to 1045, and then back up again. That whole consolidation, that measures for us on the upside into two targets, just over 2,200 and just over 3,300. So once we get through what has been right now a 3.5 month consolidation, once we break out of here, there's a lot of potential on the upside. Probably going to have patience. I mean, there may be one more hard break tonight to 1,800 down around the 150-day moving average, but the big pattern to be thinking about is, where are we going to be 6 months, a year, 2 years from now? And I think that's still got lots of upside.
What's going on with the high-tech stocks?
The FANGs have been taking their breather. We had some big upside exhaustion numbers during the summer, and there's been a lot of backing and filling, whether you're looking at a Facebook or a Google or an Amazon, and we've had rotation. The real winners since the middle of August have been over into the renewables and the solar stocks, and those ones now, after just an exceptional run, are starting to see upside exhaustion levels there. So they're probably going to be ready for a breather, looking for maybe them to give back half of the gains that we've had since the early September lows. That might be a buy on a dip as far as those ones are concerned. And it's when anything gets ahead of itself, you want to be looking to tighten up your stops and then thinking about where you would be interested in them on pullbacks. We put out a couple of pieces this week regarding the sectors, and if people want to sign up for our special, which is now 25% off the annual subscription, which is good through this Sunday through Canadian Thanksgiving or U.S. Columbus Day, they can go to our website, chartsandmarkets.com, and sign up there.
Ross, have a great Thanksgiving, and for our American listeners, have a great Columbus Day. Thank you very much, Ross.
Okay, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at Charts by Ross. Coming up, Dr. Marc Faber from Thailand. Next on This Week in Money.
Always consult your investment professional before making any investment decision.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Dr. Marc Faber, editor and publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome back to This Week in Money.
Well, thank you very much for having me on your program.
Marc, how are things going at the Gloom, Boom, and Doom Report?
Well, everything is fine. I mean, from my personal point of view, I cannot travel because we have very strict quarantine restrictions here in Asia and in particular in Thailand. So if I leave Thailand, when I come back, I have to go for 2 weeks into like a prison quarantine where you can't even go out. You're locked into your room and that's it. You also can't drink. You don't get any drinks, alcoholic beverages, and you can't smoke. So it's an unpleasant experience, and with that, they obviously don't get any tourists.
And of course, it's that situation all around the world, and that, of course, is why one of the reasons why we're talking to you is that this is unprecedented, and things are just going sideways.
Yes, it's unprecedented, especially given that we were brought up in school under the impression that under a democracy we were free, and the current restrictions, the lockdowns, are unprecedented in history, that the whole population is kind of put into prison, where in some countries, if you have a house and you have a backyard and you go into your backyard, you are committing an offense. So, in other words, on your own property, you're not even allowed to move around freely.
Are countries like Canada marching towards Marxism, socialism, communism?
Well, the indication from the BLM movement is that we will move towards some kind of a socialism. But as you know, socialism was a rallying cry for changes, and for changes that led to a totalitarian regime. In other words, in the case of Russia, it wasn't essentially a rule of the proletariat or the proletarians. It was a rule of first Lenin and then of Stalin, whereby Stalin was not a communist. He was for absolute power. He was like a Tsar, but he lived a different life than the Tsar, and he moved around different people than the Tsar. In particular, he had the ability to get rid of everyone around him. So it was a totalitarian regime.
Does it remind you of the book Animal Farm by George Orwell, where all animals are equal, but pigs are more equal than the others? Or other animals are more equal, and it turned out to be the pigs?
Yes, Animal Farm is a very good example of how some animals become more equal than others. And I'd say the Washington establishment is a prime example of the pigs in Animal Farm. Actually, it's kind of an insult to compare the Washington establishment to pigs. The pigs are much more decent, much cleaner than the people who live in Washington, D.C.
If Canada continues to put controls on the people, is big money likely to move out of Canada? And if it does, where would it go?
Actually, I think that compared to the U.S., Canada is viewed internationally in a favorable light. So I think it's rather a question that less money may flow to America and more to Canada. I think, as you know, vice chairman or chairman of Huawei is being held in Canada. I think it's a huge mistake of Canada to antagonize China, but who knows whether it's Canada's will to hold that lady, or whether they're being told by some people, by the neocons in the U.S. to do so. Who knows?
How can this ongoing push of oppression be stopped in Canada, or can it?
Well, you need a rebellion of people, and you need people who have the courage to say, the hell with it. I have a business. I want to keep my business open. I don't want to go bankrupt. Or people who are locked down to say, well, wait a minute. I'm a private citizen. It is my right to go on the street and to walk around. It's my right to go to the beach and so forth. Nobody can tell me. If sufficient people do that, what can the government do? They aren't sufficient jail. They have to put everybody into jail.
What could this mean for real estate in Canada?
Well, I think the lockdowns are bad for anything in capital cities, in big agglomerations, in mega cities like New York, Toronto, and so forth. And it's good for real estate in the countryside. And also there are huge changes in society that are occurring because of modern technology. I mean, I'm talking to you from Chiang Mai. I could be talking to you on video, on Zoom. I could be attending a conference on Zoom and so forth. I don't need to be in a financial center to be active in the financial market. That was different in the 70s and 80s. You had to be in a financial center, Hong Kong, Tokyo, New York, London, or wherever. But now you can be anywhere in the world. I have a Bloomberg. I have the news at the same time than anyone else in New York, except a few hedge funds that can front run the news.
If you were living in Canada at this point, would you stay or move, and where would you move to for freedom?
Actually, I have many friends who live in Thailand. They have children. They're thinking to go back to Canada because of the generous social services that Canada offers, free education, health care, and so forth. So I'm not as negative about Canada as you are. I also think that grain prices will go up, is favorable for the farmers. I think resource prices will go up, favorable for the resource sector. So I'm not as negative about Canada as you are.
The U.S. election is just around the corner with the likelihood of substantial voter fraud. What are your thoughts on the upcoming election and the aftermath?
Well, my thought is very simple. I don't think it makes much difference whether Biden or Trump will be elected. There are people in the background that run essentially the United States. Trump, he came on a platform or became president on a platform that he would clean up the swamp. He himself is surrounded by the swamp. He even elected Gina Haspel as head of the CIA. When she was in London at the time, there were these spying allegations and allegations that Trump had rigged the election with Russian help. She facilitated all that, and she recently refused to declassify some documents. So he's surrounded by swamp people. Pompeo is also swamp. John Bolton was swamp. Everyone around him is a swamp person. Whether Trump is elected or Biden, I don't think it will make much of a difference.
President Trump is fully declassifying documents indicating high crimes by the left. Is making people aware of these crimes good for the economy, the markets, and America?
Well, I'm not sure that everything will be shown, because don't think that the Democrats haven't got a huge file on Mr. Trump himself and what he's done in his life that wasn't above the board. So I think he will be very careful. And as I said, he hasn't really gone against the swamp. He's actually surrounded himself with the swamp, so I wouldn't expect much of him on that side. However, I have to say one thing. He's reduced regulation. He's pushed back against essentially the America becoming like Venezuela or another Latin American country. But that maximum, he can do another 4 years. And I would say another 4 years of Trump, for sure the Democrats with probably more extreme people will come in, or more leftist people will come in 2024.
Do you think we're likely to see North America balkanize?
It's a possibility. I don't think it will balkanize, but it's possible that there'll be a split between states that are more conservative, Republicans, and the more democratic states that will go bankrupt because of their unfunded pension fund liabilities and excessive salaries.
Is the U.S. dollar still a go-to safe haven?
I don't think so. But so far, the U.S. dollar has held up remarkably, although it's down 5% against the euro. But considering its appreciation before, that's not much. I'd say if I had to take one bet for the next 5-10 years, it would be that the US dollar declines very substantially, and that the US dollar will no longer be the reserve currency of the world.
Your thoughts on the Canadian dollar?
I think we're moving into an environment that is more friendly towards resources, commodities, and in this environment, I think that the Canadian dollar will find support and actually appreciate against the US dollar.
Do you think gold and silver have seen their tops for 2020, and could 2021 be a great year for gold and silver?
Maybe we've seen an intermediate top, but don't forget central banks will continue to print money. The U.S. Federal Reserve has announced that they will essentially monetize assets to the tune of $120 billion a month. That amounts to $1.5 trillion a year. So that should be supportive for gold, silver, platinum.
Is the Dow likely on target to hit 30, and could it hit 40,000 points just around the corner?
That depends on how much money you print. It can go to 1 million if you print enough. The question, will it go up in inflation-adjusted terms, or will it go up against, say, gold and silver? So if you print enough money, the stocks can go anywhere. Your coffee at Starbucks may be worth one day $100 or more, and so forth and so on. So we don't know, but I'd say in real terms, or compared to the real economy, stocks are not cheap. Having said that, I have to point out, and many people overlook that, there are two markets. There is a market for the most popular stocks, the Amazon, the Googles, the Apples of this world, the FANG and related stocks. And there's a market for neglected companies. These are basic industries, banks, mining companies, shipping companies, anything of the old economy. And among those, there are lots of companies that are very inexpensive compared to their asset base. So I would look at this market and say, if you're an investor, I would take a punt or a speculation and buying around the world, say 50 companies that are extremely depressed. Some of them will go bankrupt, but some of them can go up 5-10 times. So that is where I would look for value.
We'll have more with Dr. Marc Faber right after this.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Dr. Marc Faber. Mark, could all the money printing going on around the world bankrupt central banks?
Well, they will not declare bankruptcy because they are the establishment. They are the central planner. But the current system of money printing will obviously not last forever. It will come to an end at some point. And I think we are closer to that end than maybe some people believe. They can print money, but if the money only boosts the wealth of the 20, 50 richest billionaires around the world, and as we've seen, it creates havoc among the population that has been locked down or where businesses have been shut down, with only the government officials not being hurt because they continue to get their salaries, I think we're moving closer to an uprising.
What's the latest on the flooding in China?
I think the flooding in China is another gimmick by the China bashers to try to discredit China. Actually, I'm going to write about this because if you look at history, China has been one of the first countries in history to actually have flood controls and control the economy through the allocation of water, through canals and irrigation systems. So they happen to know something about this. Number two, they built the Three Gorges Dam on the Yangtze River. And some people have said it will overflow and the dam will break and so forth. Believe me, a project of this size and this importance for the whole lower valley of the Yangtze River basin is not or has not been built with a low quality. They had foreign advisors and construction companies, engineering companies, and so forth and so on. And if there is one thing the Chinese do well, it's actually the rollout of infrastructure. And I have to laugh when American observers condemn China about its water control. When you look at the fires in California, the Americans should better look at their own infrastructure and not criticize China about its infrastructure, which is superb compared to the U.S. infrastructure.
Trump versus China, do you see a winner?
Yes, China. I think people around the world, they're fed up by the constant bullying by America and the interference of America into politics and businesses that are no concern to them. And I think that gradually, and it's already happened, beginning with Obama and State Secretary Clinton, that the prestige of the U.S. has been in a declining mode, in a declining path for a long time.
What is the new normal supposed to look like?
Well, more controls, less freedom. Probably this is one of the periods in economic history where a generation will age or grow up that will not enjoy the prosperity my generation, the boomers, enjoyed. I think the bigger the government, the more influence the government. We know that whatever the government does is done worse than if the private sector would do it. And so the larger the government, the less freedom, the less economic growth, the less productivity growth, the lower the standards of living. The extreme case is, of course, the central planning of communist, socialist regimes like we had in the Soviet Union, in China, in Vietnam, and partially under the socialist policies in India. So you want lower standards of living? Endorse the socialists. Give contribution to BLM.
What sectors are you bullish on?
Well, I think the resource sector is still attractive. I mean, precious metals, but I also think agricultural commodities are coming to life, including fertilizer companies, storage companies for grain, and so forth and so on. So I think there are lots of stocks, as I said, that are still very depressed. I think emerging markets are, in many cases, not expensive.
Overall, are you seeing gloom, boom, or doom ahead?
Well, there are statistics that show that if technology stocks, the leading group, if they go down, everything else also goes down, or 80%. So in other words, after year 2000, technology stocks went down, but they also brought down resource stocks until 2002. After 2002, 2003, resource stocks performed fabulously well. But between the peak in March 2000 of the technology sector and 2002, 80% of stocks went down. So, whereas I think that you should invest in value stocks and avoid the high-priced, popular FANG and related stocks, I think if the FANG and related stocks comes down, including Tesla and so forth, then the other stocks will probably not go up. They may outperform the tech sector by going down less, but I think they would also be hurt.
Overall, are you seeing gloom, boom, or doom ahead?
Well, you see, I live in a large house. I live on a large piece of land. I have a large office separate from my house. So for me, unless there is a revolution or a war and people occupy my house, life hasn't changed much. But if you're in a city, in a one-bedroom apartment and you can't go out, then life is not very pleasant. You understand? Also at my age, you don't go out as much as when you're 25 or 30, when you go out every night with your friends to nightclubs and discos and bars and so forth. So for everyone, life is different. But in general, I would say, whatever the governments touch, they make a mess out of it. And I have to say, the response to COVID-19 has been a complete disaster.
What do you think government should have done?
Nothing. Then there would be herd immunity. The death rate is very low, the mortality rate. Some people would have been sick. What one could have done is to explain that elderly people are vulnerable, so you could have suggested to nursing homes and so forth, you better isolate yourself. It's not a must, but if you do it, the chances of someone dying will be smaller. But we have seen now, according to the statistics, we have in Hong Kong very precise statistics. Most people who died of COVID-19 were over 80. Okay? The average life expectancy is around 78, 80. So there were elderly people already. Most of them had pre-existing conditions. If someone drives a motorcycle and has a motorcycle accident, and he also happens to have COVID-19, you should blame his death on the motorcycle accident and not on COVID-19. So a lot was exaggerated.
Are there any so-called safe havens right now when we're in difficult, or as the Chinese saying says, very interesting times right now?
Safe haven is diversification of your assets, to have ideally a house in the countryside where you can be in an emergency kind of self-sufficient within your community. So that is a safe haven.
How can people find out more about the Gloom, Boom, and Doom report?
Well, we have a website, gloomboomdoom.com, all in one word.
Mark, what kind of things would people find if they subscribe to your service?
Well, I think they would find a different view than what they hear on CNBC, Bloomberg TV, and other mainstream media. And they would find the perspective of someone who has been for 50 years in the financial service industry, and someone who's traveled the world and knows a little bit something about history. So I don't know whether that is suitable for everyone, but for some people who enjoy a different perspective and also historical perspective, like this year, I wrote a report about essentially the philosophy of Marxism, what Marxism is all about. And then I wrote about the anatomy of a revolution, which was the Bolshevik Revolution 1917 in Russia, how it came about, why it happened, why so many actually Jews participated in the revolution and were leaders of the revolution, and so forth. And then I wrote a report recently about the intellectual property theft that the U.S. is accusing China of committing, when in the 19th century, most of the technology in America was stolen from Britain during the period of the Industrial Revolution. So all these things I discuss, and for some people it has an appeal, and for some people it's irrelevant, because they're day traders.
Mark, I'd like to get a bit of a comment on the so-called Robin Hooders who are using the free trading app on their cell phones. Are they in for a rude awakening if there's a major correction or
another
correction?
They have already been in for a rude awakening. There are lots of advertising that say how someone made a lot of money. The majority will lose money because the Robinhood and the other trading platforms, their big income is to sell the order flow to hedge funds and quant funds. So in other words, if you have the order flow information, you know what the Robinhood traders are buying this morning and what they're selling in the afternoon. And these funds management companies, these hedge funds, they can actually front run the day traders. So it's like a lottery. Most people lose money and someone will make money. But in general, all statistics that have ever been compiled about individual traders for the last 50 years indicate that individual traders make very little money. Much better would be to just buy an index and sit on it. People who bought the S&P 20, 30 years ago and never touched it, they made money. The day traders, most of them, and believe me, I know so many of them, many came to Thailand and said, oh, I retired, now I'm going to day trade, and so for a while it worked. At the end, they all had to go back and work. All of them.
Mark, thank you so much for chatting with us.
My pleasure. Thank you very much. Bye-bye.
My guest has been Dr. Marc Faber, publisher of the Gloom, Boom, and Doom Report online at gloomboomdoom.com. He was speaking to us from Chiang Mai, Thailand. Coming up, Marc Leibovit, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Marc Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRtrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. Welcome back to the show.
Thanks for having me back, Jim.
Great to have you here on This Week in Money. Do you have a special offer for our listeners?
We do, at VRtrader.com. That's VR, VictorRobertTrader.com. We have a bunch of newsletters ranging from gold, silver, metals resource to cannabis, and including our annual forecast model, which is something you guys really need to check out. Anyway, we have a 50% offer, still good here. Try to extend this as long as we can because of a great following here on House Street. Anyway, it's 50% off any of the newsletters for whatever period you sign up for, and the promo code that you enter on the order form is 2020 half off. That's 2020 HALFOFF. Thank you for mentioning it.
Mark, are the U.S. stock markets anticipating the upcoming election results?
You know, it depends which way you look at it. If you're bullish on Joe Biden, then you think the market is going up and it should continue to go up. If you think if you're Donald Trump supporter, you think it's going up because you think he's going to win. All I can tell you is the market's doing its own thing. We had a cyclical forecast that said we could be down into the middle or third part of October, and it bottomed early. But I still think we're in a volatile period. A lot depends on what happens on the election. If you're a trader, it's really tough. I mean, what's the market going to do? I mean, the market can go up or down no matter who's in the White House. The main issue is there's sectors that are going to do better than others, depending on what party is in charge. Right now, we're on a trading basis. We're bullish. We were bearish, and then the indicators said no. We hit a little bottom here, so as a trader, we just got a little more bullish here. But, it's almost a good advice to stay out of the markets here until the end of the year, unless you are a trader, because the volatility could suddenly hit overnight. Who knows what could happen? There's all kinds of stories about what the Speaker of the House wants to do, and who's going to actually be president. And I think if you're voting for Biden, you're really voting for Kamala Harris. I mean, he's not going to make it long term, and that's a big concern. But we have a lot of people who don't really care, who want Trump out. So, like I say, trading bullish. I would say, don't hang around too long, and another week or two maybe, and then that's probably stretching it. And I think there's going to be a lot of anxiety right into the election. We could get a sell-off, particularly if the election is contested. And then our model said that after we did get some type of bounce here, we would head back down again. So I don't know if that is predicting a Biden victory or whether it's uncertainty that nothing is resolved, and the market doesn't like uncertainty. So if we have an election and there's no finalization of it, the market could go into a tailspin for a while until it's all figured out. But I got to tell you, it's been one heck of a great trading environment for those who like to follow the stuff and also follow sectors that are doing well. Gold and silver took off here the last couple of days. We jumped back there a little bit on a trading basis, particularly as the U.S. dollar started to come off. And we were a little more optimistic on the dollar, but on a technical basis, it reversed here. So that's giving fuel to the precious metals. And we talked about, I'm probably going on beyond your question, but one of my favorite groups, the solar stocks, for the last couple of years had one of the most unbelievable weeks here in the last week or so, just exploding to the upside, index into new bull market highs. Alternate energy still seems to be very hot, so I guess the anticipation is that I suppose that a lot of money is going to be spent for alternate energy, whether that means the Democrats are in or the Republicans were going to do it anyway. So there's been a lot of action, just a lot of stuff happening. And then another group that took off here the last couple, 3 days, well, actually we've been in it a little longer than that, is the U.S. Cannabis Stocks, particularly since Kamala Harris made a comment on their interview the other night, on their debate the other night, that they would legalize marijuana in the United States. But these companies, U.S. marijuana cannabis stocks, were doing well anyway because they were making money, unlike the Canadian names, which have been doing very poorly. So certainly a lot of action out there, whether you are bullish on the stock market or not. If you're in the right stocks and the right trade, it's been a great couple of weeks.
Are we likely to see further all-time highs in the U.S. stock markets?
There's a good chance we could see highs. I don't know if it's going to hold, though. I mean, that's sort of where we're at. I mean, I'm really nervous going out the next year or two. I mean, in terms of my longer-term view of the markets. Not to say we can't get some big moves to the upside along the way. I'm still nervous going out for the next couple of years, but that's sort of an irrelevant comment since we tend to be more aggressive than that on the shorter term. But there is a chance, between now and early to mid-November, there could be a spike here into new highs. More likely, I would think, in the Dow Industrials or the S&P. It sure seems like the NASDAQ stocks have peaked out. It'd be more of a move for them to go back to new highs. But, it could happen. It could happen. But I'm not betting on that. We're trading. But I could see that as a possibility. But if that does happen, it could be a bull trap. And then you could end up selling off sharply after that, perhaps catching investors thinking that it's just going to stay up. I think it's overall extended, particularly since our model indicated that even if we got a rally here into November, we could sell off into the end of the year or into the first quarter. So you got to take a trading viewpoint. If you're super long-term on the markets and you don't care for the next year or two, I mean, a lot of people are just long-term holders. I would say the basic trend probably will reinstate itself, but there could be some nasty periods along the way. And I've always thought that if you look out 10 or 15 years, you're going to see the indexes at substantially higher levels. The Dow Industrials could be 40 or 50,000 if you look out over the next 10 or 15 years. But I don't think investors really want to talk about that when you start to see downside volatility. So as we saw back in March, they seem to get shaken out, and they're really trying to avoid that kind of market action, which could repeat here in the next year or two. So the answer to your question is good chance it could happen. I wouldn't bet the farm on it, but on a trading basis, they sure look like they want to trade a little bit higher here short term.
Is a strong stock market going to be important in the economic recovery process?
Gee, I think that's sort of a given. I think we all know that the powers that be, want to see the markets up. I mean, we've got the plunge protection team here in the U.S. that was set in motion by Ronald Reagan following that executive order back in 1988. You got the Federal Reserve out there doing what they can to support the markets in terms of rates, but also their ability to buy stocks and buy indexes and even individual, company bond offerings, we have learned. So it's all tied together. I think the powers that be want the markets up no matter who's in power. I think the whole issue of who's in charge and who's in power, but everybody wants to make money. We talked about this last week. You could be a communist Chinese investor, and you were looking to make money. The biggest capitalists are in communist China. So even though you may be socialist or communist, apparently everybody still wants to make money. So I think everybody still wants the markets up.
Would you be surprised to see interest rates rise?
I'm not really confident either way. How much lower can they go? I mean, they're already, talk about negative rates here in the U.S., possibly. What's going to trigger interest rates going up? A complete collapse of the bond market, pretty much around the world. We know the European market's having its share of problems. I would definitely avoid government bonds. If I had owned bonds at all, I'd probably own corporate bonds. But in terms of if rates are going to suddenly tick up, it makes sense that they should. I have no clear signal that they're going to take off big. There have been rumors that the Fed is toying with the possibility of negative rates, which we've already learned in Europe really doesn't do much good anyway. Japan had a terrible experience with it. So I'm just sort of on the fence here a little bit about whether rates are going to take off or not. But we'll see it in the charts. And, obviously a big surge in rates is probably long overdue since we've had low rates for such a long period of time. But really the question is, what would be the trigger for higher rates? And we're going to have to think about that one.
How does the U.S. dollar look short-term and long-term?
I was a little more bullish on the dollar here. It looked like it was bottoming. It rallied a little bit, but then it just hit a brick wall here the last couple trading days. So short term, it's acting poorly. Looks like it wants to come off here a little bit. Then we're just going to have to watch the technicals. I hate to get too bearish on it because it's already down a lot. Maybe we're going to see weakness here, perhaps into the election or the end of the year, but at some point I still think it's way overdone to the downside. It's the, what's the expression, as they say, it's the last or the best horse in the glue factory. I mean, pretty much currencies around the world are in deep trouble, and the last bastion of strength is the U.S. dollar. So I think that's sort of the last one to really bite the dust, so to speak. So I'm not really that bearish on it. I can see where it could pull back here, but I would bet that if things really turn poorly economically around the world, the U.S. is still the strongest place for an investment, and I still think the dollar is still the bastion of strength. So I would give it the benefit of the doubt and be more bullish on it, looking out in the next year or two rather than be bearish on it.
Could gold and silver see new higher highs for 2020 before the end of the year?
Yeah, sure could. Our model said that was that was possible. Said we had run into a little choppy period here, and then we should be strong into the end of the year. So that was our original model. We thought we'd get a little bit more of a shake. We thought the U.S. dollar would rally a little bit more here short term. There'd be a little bit more of a pullback in the precious metals. And it looks like we've already hit a little bit of a bottom in the metals and a little top in the dollar here on a trading basis. So, reasonable chance between now and the end of the year. I think, we get to take out the highs and see a bit of a run. I don't have a real clear target. I could guess about where we could go. We can look at the charts as it goes up, but it sure looks like, it's going to be a trading rally here, and how long it's going to last, that I can't say, except seasonal patterns traditionally show strength into potentially February. So, I would say yes for now until the numbers change.
Is gold in a long-term bull market?
Yes, I would say that appears to be the case based on what we've seen here in the last, last 20 years since the big lows back in 2000. There is one analyst friend of mine who passed away a few years ago, and I highlight him in my newsletter every week. And it's not a famous name on Wall Street, but his name was Terry Laundrie, and he created this what he called the magic T, which was the way stocks trade. Like as much as they go down, they go up, and so forth. And when I got to know him about 20 years ago, back in 2000, he had predicted that there could be a big high in gold around 2020. And even though we had the big top in 2011 and we came off as much as we did, we're back up to new highs in 2020. And, he was really very insightful about some bigger picture events. And I'm just sort of scratching my head and I'm saying to myself, that prediction that was made 20 years ago, and the fact that gold has come back to new highs this year or into early next year, there's a possibility that, big highs could be seen in gold here. I'm not saying it's over forever, but the fact that we're in 2020 and let's say we run to new highs into the end of this year, have a big run, or maybe even into the first quarter, we can look back and say this was sort of a blow-off top. And a lot of this is going to be confirmed. Technically we'll have to look at the trading patterns and volume and so forth. So that worries me a little bit. All the fundamental story out there is that you got to hold gold forever, and it's going to go to $10,000 or $20,000 an ounce, and silver is going to go to $1,000 or $2,000. And you hear all these stories, and we all know that gold and silver should be a lot higher based on inflation. Based on this everyone's seeking safety. It just didn't make sense that all these years that gold and silver underperformed as much as they did. There's been a lot of stories about manipulation in the market or government suppressing the price of gold and silver. So I'm always nervous about the market because it whipsawed so many investors, and it may do so again. So the common sense answer is yes. It should go higher over time. We have a 5,000-year history that gold is, a store of value. But from a trading or near-term perspective, we tend to get overdone, and it wouldn't surprise me if it happened again. So short-term positive. Let's see how it trades between now and the end of the year into early next year. But I really can't sit here and tell you that you got to own it, long term and feel safe. I mean, gold could go to some big number and blow off like it did in 2011, and we could have a huge 1,000-point correction just at the time when it's least expected. So that sort of worries me about getting overconfident in the market. I'd rather take a trading viewpoint and look to sell into strength here in the next month or two.
Is silver likely to be seeing new all-time highs, say over $50 an ounce?
I'd be surprised if it does. I know the common wisdom is that it should, and it's way overdone, and there's a lot of predictions that it should really take off, and it's the poor man's gold, so to speak. It just never seems to really gain, momentum, and there's all these reasons why it should. I'm not going to say it couldn't happen, but I'd rather be in gold than silver. And certainly there are other metals that you could be playing. I mean, the copper market has been strong. Lithium has been strong. There's other places to play the metals, and the palladium, of course, we know had a huge run. So there are other ways to play the metals and to bet only on silver because it's sort of a catch-up play, I guess. People looking for it to get caught up. I try to trade it. I think it could trade higher here, perhaps as gold moves higher in the next month or so. But I wouldn't be betting on big numbers.
We'll have more with Marc Leibovit when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Marc Leibovit. Marc, what's the latest on crude oil?
With the 3 hurricanes hitting the Gulf of Mexico in the last couple months, you would think that crude would have done a little bit better than it has, and maybe it'll be more impacted this time. I guess there's a lot of fear that, from a political point of view, particularly, with the Democratic viewpoint that they want to shut down fracking, and there's, the green world policy, getting away from natural resources and moving into alternate energy. You just wonder if we could really survive without the crude oil. So much is dependent on it, but there's so much political pressure to suppress crude oil and move into other energy sources. You wonder. My gut feeling is crude oil is here to stay. People get negative on it, but we really do depend on it. I don't think the alternate sources can really replace the energy that's created from the use of crude oil. And there's just unbelievable insanity out there. This is getting off the subject a little bit about the anti-nuclear viewpoint. The same people that are anti-crude oil, even though nuclear is not the same market and it doesn't create the same issues, they're anti that as well. And we know that the truth is nuclear energy supplies infinite energy at low cost forever. We have nuclear ships out at sea that can stay out there forever running on energy. And, that's really the big answer. We depend on solar, supposedly, which will take, I think, generations to really perfect and expand enough to replace the energy that we generate from crude oil and so forth. So I'm thinking, we're sort of misguided in where we're really going, Jim, on the energy front. So my gut feeling is there could be political pressure against crude oil. I don't think it's going away. On a trading basis, it's been pulling back here in the last couple of months, maybe in fear of the political outcome here in the U.S. But my gut feeling it's temporary, and we'll see crude oil take off again in the months and years ahead. So I don't think it's over for crude oil. And I don't think it's over for nuclear either, though there's a lot of political pressure against it. So I would say bullish, big long-term, maybe bearish very short-term, just to be cautious here to see how it reacts. But that's sort of my gut feeling. But, you got to understand I'm more of a trader, and I don't make money, trying to predict that crude oil is going to be $100 an ounce or $10 an ounce 2 years from now. We try to catch the short-term, near-term moves, which could be anywhere from, a couple of weeks to a few months. And that's why we've survived these last 40 years that we've been doing what we're doing. We try to follow what's sort of happening and try to adjust if we're wrong, and follow the trend. And I consider myself a survivor, that I'm still out here doing this after all these years. And I think that's really the most important answer I could give you, is don't get caught into any viewpoint, because things can change and do change. There is volatility. Not taking undue credit, but back in late January, early February, I warned a Canadian audience in Vancouver that a big sell-off was coming in the market, not knowing anything about the virus or anything else. This was based on our cyclical studies. That same cyclical studies said to be a buyer of the market in March for a rally that could carry into late August, early September, which is exactly what happened. So we've been lucky in catching some of these moves, and I think that's really the focus of VR Trader. When we're wrong, we make our adjustments, and I think that's really the key to be successful in the markets, to be flexible and not to get caught in any long-term viewpoint, no matter what the market, no matter what the sector.
We're hearing rumblings of food shortages. Are you seeing any signs of this in the agriculture markets?
Yeah, some of the agricultural, in fact, we're long several of the agricultural ETFs. I know corn was up today, for example. Soybeans has been doing a bit better. There's been talk of food shortages. There's a lot of analysts out there talking about it. We're seeing some price appreciation. These markets are still very, very depressed. You know, I'm not smart enough to predict what would cause future food shortages. There's talk that might be some earth changes, perhaps more earthquakes or volcanic activity that could change the climate in some way. If we get a major volcanic event, there's been a lot of talk and rumor and speculation about the Yellowstone volcano, and if that blew up, that would probably wipe out the western U.S., and of course they've been talking about that for many, many years. So if there's some geocosmic event, there's something coming, or is there something here on Earth changes that's going to affect climate? But like I say, a lot of people are predicting that, but I am seeing prices move up, and the technicals are showing that you want to be in the agricultural sector. So, I can't pinpoint what would actually cause it. Is it related to the virus? Is it related to, we have fires in California. We have a lot of things going on that could affect crops in many ways and commodities. So, or perhaps it's just a big cyclical event. These commodity prices, like stock prices, run in cycles, and maybe they're due for a big rebound here. But yes, to answer your question, we are long some of the agricultural ETFs, and they do look higher.
Mark, is there a connection between Astral, geophysical events, and the markets?
I'm a big proponent of that, and I highlighted that in a couple webinars I did recently. But just one basic one we could focus on is the solstices and equinoxes that happen, 4 times a year. And for years we've known that around March, June, September, or December, you could often see changes in the market tied to the solstices and equinoxes, and you think that's silly stuff, but the March low that we saw came within a few days of the vernal equinox in March. The September high, which came right early September, came a little early. It was the autumnal equinox, which was due by mid-September. We're coming up to one in December, around the 20th of December. So within a couple of weeks of that, there could be a change of direction in the market. I've noticed this for decades, and it doesn't pinpoint the exact day, but we seem to be impervious to the planet and what's going on around us, but there are cycles that do repeat, and nothing is perfect. But if you track these over decades, you'll see there's important market changes of direction around planetary changes. And, we try to look at this stuff. We look at the lunar cycles. I'm not an astrologer, but I pay attention to anything that can affect, here on Earth in ways that, we just don't, read about or talk about. We don't sit around worrying what the vernal equinox is going to do or the summer solstice is going to do. We worry about what company earnings reports there are or what political events might be occurring. But yet these events could, by some, wild connection, affect human activity and psychology. And, you have to be aware that there could be changes around these times. So, we're just insects here. We're just, we think we control everything, but the powers that control the planet and the universe are far greater than anything that we can even imagine. So I think, even if you look at the lunar cycles, if you look at the full moon, and there's been a study showing, increased, activity in hospital emergency rooms around the full moon, and we know that the human body is predominantly water, and we know the moon controls the tides and or affects the tides. So you got to be open to all this stuff. And the story that I tell, and I've repeated this on the show, and we may be getting carried away here, but one of the original influences that I had for the lunar event, actually there were two, was Ian McAvity, who's a Toronto technical analyst who wrote a letter called Deliberations, who back in the early 1970s appeared on the Louis Rukeyser Wall Street Week television program, and he talked about the correlation of the full moon to the actions in the gold market. And I was very young back then, and I remember listening to him, and that influenced my thinking. Is there a correlation between the moon and gold or the stock market? And sure enough, over time, you can see highs and low points created around these cycles. So he was a genius in his own way and influenced me and many others. So there is definitely something there, Jim, and you got to look at it.
Are marijuana stocks still in a bear market?
They seem to be coming out of it a little bit. Depends which ones you're in. And I mentioned this at the top of the interview. The U.S. cannabis stocks, there's a few big names, are doing a great job in turning a profit, which is something that we really haven't seen in the Canadian names. A lot of money was raised. They've been big disappointments to investors. They had big runs up. If you were trading them, they did great, but it didn't last, forever, and they have collapsed. Maybe they will turn, but I think if they turn, it'll be because of markets that are generated here in the U.S., which is a much bigger market than Canada, as you know. So we've really been long some of the cheaper names in the U.S., which are really money machines. They're doing well. They're making money. Great cash flow, complete opposite of what we saw in Canada. So it depends which ones you're in. And the question is, that we talk about cannabis, we think about the big names. And we did see a little positive action in Canopy Growth in the last couple trading days, and that's because of their connection with Acreage Holdings and the fact that they're trying to expand in the U.S. If they can make that work, then that might be a Canadian name that could turn around. But there's some other names out there we like better, which are listed in our cannabis newsletter. So I think it's a bull market depending which stocks you're looking at, and I don't think it's over for cannabis or marijuana.
Are these volatile markets good for trading?
I'm telling you, we're having a time of our life. These past 12 months, the volatility that we're seeing in the market, just look at what happened in March. I mean, it was just like, just incredible. The volatility is really what makes it exciting. And, even on a short-term basis, when you see some of these stocks run up big, pull back sharply, and then take off again, it might drive investors crazy. But my problem is keeping on top of them all and trying to trade them. There's just too many ideas, too much volatility going on. So you got to sort of focus on a few names, a few sectors, and hopefully you can pick up on it. So, and like I say, we don't pick every bottom and every top. We're trying to catch the action. So that's been really the key. Can you play the swings in the market, no matter who's in the White House, no matter what the news story is, whether it's a hurricane or, it's a war, whatever's happening out there, you're going to find some stock or stocks or groups that you can trade and take advantage of. And when you have volatility like we saw this year, which has been probably a record, I think, in terms of the kind of volatility we've seen, it just says that as long as we have free markets and you can trade them, the opportunity is infinite. And we're very happy that we are seeing it, and I'm sure we're going to continue to see it.
If socialism is able to take hold in some countries around the world, what effect would it likely have on stock, currency, and commodity markets?
Oh, boy, that's a tough one. Socialism is not good for the country that, it's itself in terms of the people, but the question is, will the socialists still be in the stock market? Or are they really communist? As I mentioned earlier, you got communist Chinese that are all over the stock market and are capitalists by heart, even though they say they're communists. And I guess it's like the old book Animal Farm. Some people, individuals are more equal than others. I mean, there's always going to be money is the goal. To make money, so there could be look what happened in China. You've had a huge bull market in stocks. Of course, it goes up and down as well. And then you had a communist government in charge. How did that happen? Well, they were taking advantage, I suppose, of the Western markets as well. So I'm not a socialist by any stretch. I'm a capitalist. I'm more of a libertarian myself. Less government, the better. But it seems like even those who are socialists or communists still want to make money, as mentioned already a couple times in this interview. So hopefully, unless they're so crazy they want to shut all the markets down around the world, which would be, cutting off their nose to spite their face. I don't think they're going to want to do that. But if that happened, then I suppose that's the end of the markets. But I don't think that's going to be any event that's going to be brush so soon. I think they all want to make money, and they're going to figure out a way to do it.
In order of safe haven quality, where would you rank the U.S. dollar, gold, silver, and cryptocurrencies?
Well, the cryptocurrencies are been poo-poots for the last couple of years, and I still think that's going to be, a potential future. I'm not happy about it. There's a war against cash. I think governments want to probably digitize everything and get everything under control. They don't like the freedom that people have when they can muster their cash versus being monitored day to day. And I think that's been the goal of government, to try to gain more control. So that's probably better for the cryptocurrency market in terms of that might be the direction that governments may want to go. They may want to digitize currencies. You can't have cash, and everything has to be on your computer. So even though there was initial reaction against it, I think the realization is that could be a big picture trend. It's also a voice for freedom, the fact that you can move your money around regardless of borders, and so forth with cryptocurrency. So I think they're here to stay. Whether they'll be some of the freedoms will be taken away and only government will take control of them ultimately, or whether we'll still have a bunch of individual cryptocurrencies as we still have now. Only time will tell. Depends whether we can, remain independent from government on a certain level. As far as gold and silver, all you can say is they've been around for thousands of years. Apparently they're here to stay. Whether they're going to ascend to huge price objectives that a lot of people are been talking about, only time will tell. The fear is that huge discoveries could be made and could suppress the price of these metals, and they may not be the greatest investment that everybody's hoping for. They are tradable, which we try to take advantage of. So, and as far as currencies are concerned, as I mentioned earlier, the U.S. dollar is the last bastion of currency strength on the planet. So if all the currencies go to hell, I guess the U.S. dollar will be the last one to do so. So if I had to beat any currency, it would be in the U.S. dollar. So let's see how it unfolds.
Mark, can you remind people again about your special offer?
Yeah, sure. It's 2020 half off, 2020 half off at vrtrader.com. That's the promo code. Go to any newsletter, and we're happy to honor that for the next couple of months. Thank you.
Mark, thank you so much for being on This Week in Money.
Thanks for having me, Jim.
My guest has been Marc Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Dr. Marc Faber, and Marc Leibovit. And thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry, and happy Thanksgiving.
Yes, we do have that holiday coming up. The office will be closed on Monday, and it's always great to be on the show, Jim.
Larry, you're one of the hardest workers I know in the mining and mineral development business and recycling, so that means you must have had another new news release this week.
Yes, we did. We had a very good progress report on what we're doing on the pilot plant to maximize everything that we can. And, we had 92% recovery on a continuous basis, which is good, not like the batch, which is done in batches. We had actually had a 99.5% recovery on that, but that gives us a goal to shoot for, to bring that 92% up to the range of the 99%. So
that should be good news for the listeners. It's certainly good news for us here. I know people get tired of what they call waiting, but I try to keep them informed as much as possible. And, there's been some complaints, but mostly a lot of kudos for keeping them informed. When I used to be a heavy trader in the market, I found that getting hold of the CEO or the company, for that matter, was almost impossible to get news out of them. And usually in that case you end up losing your money. But no, we try to keep our share base informed. And I'd like to talk about a few other things that we're doing, Jim, that I think is very essential. You're seeing all kinds of releases out there. There's lots of recyclers coming out of the woodwork. You go to their site, you don't see anything, and most of them are private. You don't see anything about what process they're using or what they are doing. But I'd say the majority of them are producing a black mass, which they're selling to smelters or to refiners, depending how clean it is. And I'm not seeing the money in that, but I would say that would be 80 to 90% of all of the work that's being done and announced out there about recycling is black mass. Now, we have to, just going back to my first statement there, we have to maximize the design. I have been in the mining business for 50 years, public arena for over 40, and it's something that's very important that you've seen it. You've seen what's happened when you don't do enough preliminary work. You've seen big projects fail, go into bankruptcy, and I'm talking hundreds of millions of dollars. So no, you have to do your homework, and the devil's in the details. So we have to get that down. One thing I've learned is you don't want to go to the market with an inadequate project, and we're trying to avoid that. Some of the other things that we want to do is maximize recoveries, simply because we have a closed-loop process, and we don't want anything going back into the environment. Now, you're already seeing some companies that are having permitting problems, and those permitting problems are, let's put it this way, if you don't have a total answer or a total solution, you end up with waste product. Where's it going to go? How much carbon dioxide is going into the air? That sort of thing. So it's getting more and more difficult to permit, and we want to ease that process by having a total, complete environmentally friendly and closed-loop operation. So permitting is going to be very important in the future, just like it is with mining. You can't just throw up a mill in the middle of the bush like you did back in the 50s. You've got to go through a permitting process, and I've gone through several of those, spent millions on the permitting, and we don't want to get caught in that crusher. Now, the other thing that people talk about all the time is the NDAs. Why can't I announce them? Well, NDA stands for non-disclosure agreements. And in order to get companies involved with us, like battery manufacturers, we have to enter into NDAs. As a matter of fact, NDAs seem to be in every stream that we're involved with. And so I can't announce a company. I'd like to. You'd be surprised at the companies that we have talked to. But we have to have to enter into NDAs in order for them to talk to us. So I just want everybody to know that I'd love to be able to disclose the names of those companies, but I can't. And that makes it a little bit difficult to move the visibility, I guess you'd say, of the company forward. Realize that there are serious players out there that are interested in what we're doing. So, we have to move with the flow. And the flow is NDAs are a huge part of everything that we do. So, I'm sorry, guys, but I can't divulge those names. I get lots of emails wanting to do that, And not only that, but I get lots of emails that start out with, it seems like X company has a similar process to you. And we follow that closely. And I've never seen anything in the public arena that would even begin to describe what they're doing. So I can't see how they come up with the idea that they're the same as us. And but it takes up a lot of time to talk about those sorts of things. Is all we can say is there's not enough information in the public arena for us to compare our project to their project. And I know that we are probably the only, aside from the J.B. Strobel, who has disclosed what they're doing. J.B. Strobel's recycling is different than ours. He does use high heat, and but I think he's on the right track. And maybe one day he'll phone us up and want to combine our operations, which would be great for me and great for the company. So, but the J.B. Strobel is, I'd have to say, is the only guy that's transparent aside from us out there. And so we can talk about him and compare our technologies. Now, ours is strictly metallurgical. There's no high heat involved. And so there's a major difference between us. I don't know about recoveries or anything like that because that was never spoken about. But, so I've included an article by J.B. Strobel out there. And that reminds me, Jim, that back in 2010, when Tesla was first getting their legs under them, Dan McGorty, who's on our advisory committee and worked with presidents in the D.C. area, got a hold of JB and got us in contact with Elon Musk. And we had a couple of emails back and forth. I'm trying to convince him that he should be looking at manganese as a good cathode material, lithium manganese, a clean material that we can produce from Artillery Peak. And but as you know, he moved ahead with lithium cobalt, so that did not work out. Let's put it that way. And so I'm pretty sure that he's at least aware of us out there. And the major thing is that we do try to get in to talk to the right people all over the world. But in the last little while, the right people have been contacting us. So that's a good way to end the podcast, Jim, is to say that the company has a who's who of NDAs out there, and sooner or later something will gel. Now, I'm asked, why haven't I done a deal yet if my process is so good? Well, the first answer is the process is good. The technology is solid, and they only have to go through our releases to see that that's so. But I'm not a battery manufacturer, and I'm not sitting in that boardroom, and the decision makers are, for some reason or another, not pursuing recycling as a environmentally friendly thing to do. But that's going to happen, and we're going to be there when it does.
Larry, for people brand new to American Manganese, what's the company all about? Where are you traded and under what symbols?
Okay, the company is a critical metals company that it was involved in the recovery of manganese from very low-grade deposits in the United States. We developed the process, which was patented, and is patented in 4 different countries. And that process allowed us to take 2 to 3% grades and turn it into let's put it this way. Our costs were similar to the Chinese costs for producing the same type of material. So that was working out well. We spent about $20 million on that, right up to a completed pre-feasibility study. And the price of manganese, it was a race to the bottom on when we were going to get the feasibility done. And the price of manganese was going to crater, and it was cratering all through that study. So it ended up to be a non-profit situation. And we've taken that technology, that's a cornerstone of our recycling, And now we have lots of information out there on our recycling process. So the company is heavily involved in recycling, but it's also reactivating some of its manganese. So it's looking great, Jim.
Larry, how can people contact the company?
Well, they can contact the company by going to our website, AmericanManganeseInc.com. They can phone me, 778-574-4444, or they can send me an email at LREAUGH@AMYMN.com. And we have a great website out there, AmericanManganeseInc.com, that they can get all of their do all of their due diligence on.
And happy Thanksgiving Day and happy Columbus Day to our American listeners.
Thank you, Jim.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 9th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.